So in this video, we're going to talk about ChargePoint, and we're going to start with the monthly chart. And the monthly chart is suggesting that the downside momentum has come to a halt, and you could see a potential reversal happening over the coming months. Also, based on the RSI, you can see how it flatlined, also giving you another indication that the bottom might be in. Worst case, look at this dollar level as support. Now for some fundamentals before we continue with the technicals, let's look at this article. It is coming from the Motley Fool. So the next chapter, the EV revolution, is upon us. While Tesla remains prominently featured in it, other names are emerging as compelling investment opportunities. Battery makers and charging infrastructure providers in particular are finding fast growing demand, which of course becomes revenue, setting the stage for eventual profitability. Now, risk-tolerant investors looking for the next big winner from the EV space might want to put ChargePoint Holdings stock on their radars, if not in their portfolios sooner than later. It's trading at a discount right now, but this may not be the case for much longer. According to the Motley Fool's in-house research, a little over half of the U.S. 70,000 EV charging stations use ChargePoint's tech. Now, the company doesn't just manage its own network of consumer-facing stations. It works with businesses and owners of EV fleets to provide them with their own private charging solutions or charging stations to serve their customers. Now, Bloomberg NEF predicts that annual sales of EVs will nearly double between now and 2027, when they are expected to reach a nearly yearly pace of 30 million units en route to the sale of a projected 70 million EVs in 2040. Straits Research believes the worldwide EV charging infrastructure market is set to grow at an average annualized pace of nearly 23% through 2023, while the charging stations slither of business could grow by 44% per year for the same time period. Now, ChargePoint's top line is expected to be down to the tune of 18% for the fiscal year ending this month, but analysts also expect its revenue to grow nearly 20% for the year ahead before accelerating to a growth rate of more than 30% the next year after that, in line with the overall industry's anticipated growth. Now, perhaps more importantly, the company continues to chip away at its net loss and should continue doing so. At its fiscal trajectory, ChargePoint could reach net profitability in calendar year 2027. So if you can stomach the above average risk and volatility and are willing to keep close tabs on it, there's a bullish case to be made for adding this ticker to your portfolio. Now, it is trading at $1. It is cheap. The rewards far outweigh the risk as price hovers near this dollar level. And here's what I'm projecting. I want to see price spike. I want to see price pull back, forming that double bottom. You could also look at this as a W pattern. And then I want to see price spike higher, hitting this first target at the $2.40 support, now resistance band. Let's go down to the daily chart. You have a smaller version of a W. And we'll put that in fluorescent fuchsia. So price is fractal. What happens on the higher time frame is also performed on the lower time frame. Now, one really cannot get bullish until you see prices breaching and closing above this key 200-day moving average. Anything below it, you're in a secular bear market. Anything above it, and you're in a secular bull market. So let me know what you think. Is ChargePoint a bargain or is it a value trap?